tech rally on Wall Street led by sharp gains in Tesla and Qualcomm. Stocks in the Asia-Pacific opened mixed following the positive handover from the U.S. market. It's a record close for Nifty on Monday as it scales Mount 20,000 for the first time. Financials and Reliance Industries lead the gains. The Gift Nifty suggests a gap-up start for the Indian market. Oil prices remain unchanged as the market looks ahead to monthly forecasts from the OPEC and the IEA. Brent holds firm above $90 per barrel. Gold prices are steady even as the US dollar retreats ahead of the US inflation print this week. And all eyes on macros today. A CNBC TV18 poll expects CPI inflation to come in at 7.08% above the RBI's target band, and industrial production in July, meanwhile, is estimated to have grown at 5.2%. And global investment firm KKR to invest over 2,000 crore rupees in Reliance Retail Ventures at an equity value of 8.36 lakh crores. KKR's stake in Reliance Retail will increase to 1.42%. Hey guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we have for you this Tuesday morning. It is definitely a good morning. We've scaled that 20,000 mark. The handover has been positive as well. So let's take a look at what's really happening across global markets, because like I pointed out, the handover was quite positive from the US. The Asian markets are largely higher right now, and what's doing well, you have the Taiwanese index, which is up around 0.25%. You have the Nikkei market, which is up around 0.25%. So no big gains coming through, but a lot of the markets are seeing at least, a tinge of green right now. What's not doing well, meanwhile, you have the Hong Kong market, so that's down around 170 points, so almost a whole percent gone on the Hong Kong market. That is looking a little bit weak. You have Kospi also, which has slipped a little bit, so that's around 0.5% in the red. Barring that, the rest of Asia is looking quite all right as we, really start things off. The Gift Nifty will come up for you, and this is looking very solid because it looks like after that solid session that we had yesterday, once again, the start for our own markets is likely to be well in the green. 75-point gap up is what the implied open is showing right now. So let's see how things really move from there. But with that, let's also talk about the US market now, because key indices closed higher on Monday after posing weekly losses. So the broad gains were led by Nasdaq. All of the tech stocks did really well. This ended over 1% higher. The S&P 500 and the Dow, meanwhile, closed the session with gains of around 0.7% each on the S&P, and the Dow, like you can see, was around 0.25% in the green as well. So across the board, quite a good close for the US markets. Some more stock-specific action I want to bring you quickly is that Tesla shares jumped after Morgan Stanley upgraded the stock. And we also had Disney stock, which fired up very well on reports that Disney and Charter Communications have sealed a deal to end the cable blackout. So that was important as well. And now the key cue to really track for the US market is the release of the CPI print tomorrow. So that is what we are going to be tracking, what global markets are going to be tracking as well. But on that note, let's listen in to Jim O'Neill, former chairman of Goldman Sachs Asset Management, talk about the market trajectory and how he really sees things moving from here on. Listen in.
It was normal to have a significant positive level of so-called real interest rates. So ultimate, and probably therefore with it, a more effective allocation of credit, and probably more consistent with whatever sustainable growth is being sustainable growth. So I actually think that'll be a good thing for the world if it turns out we could cope with it. But the dilemma, of course, is we're seeing a bit, and you discussed on the earlier segment, I think, for the equity markets, it's quite a challenge having to think about competing with rates at higher levels for a much longer period, particularly because until recently the market seemed surprisingly convinced that the Fed was going to be chopping again pretty soon.
All right, that is a very important word coming in, but I also want to bring you some opinion, and this is on the bond market, which has, of course, seen a sharp spike in the yields over the past few weeks. We've all been talking about this. So listen to what Bob Dahl of Crossmark Global Investments had to say on whether the yields are likely to really peak anytime soon. Hear him out.
I think when you push above 4.25 and the 10-year, that causes equity multiples to get a little nervous when they're selling at nearly 20 times earnings. Bonds are key here. I don't think we've seen the high in yield yet, but we've come a long way. So unlike 18 months ago when the 10-year yield was 1.5, a really bad deal. 4.25 is a lot better. So on weakness, we would be nibbling on bonds and are slowly extending our durations.
All right, that is all of the global market action and opinion that we are tracking. But with that, let's move on and talk about all of the domestic cues that you should track as we get into this trading session, all of the individual stocks also that you should have on your radar, because there's been some very important news flow that has come through post-market close. So we have our research team here to really prep us up for this trading session. Vivek, Surbhi, Nigel are all going to take us through the trade setup. Surbhi, coming to you first, take us through all of the news flow that came through, the biggest perhaps being on Reliance Retail yesterday evening.
That's right. So the biggest is on Reliance Retail. KKR is going to invest 2,070 odd crores in Reliance Retail at an equity valuation of 8.3 lakhs crores. With this, the stake will increase to 1.42% from 1.17%. Next is L&T. The buyback price has been increased from 3,000 rupees per share to 3,200 rupees per share. L&T Finance will also be on our radar. Sources say that Bain Capital is looking to sell a stake up to 850 crores via block deals. The floor price is likely to be 129 rupees per share. ICICI Bank, the company has gotten an RBI approval for reappointment of Sandeep Bakshi as the managing director and CEO. Krishna Institute will also be on our radar. The company's subsidiary has acquired additional 13% stake in Kondapur Healthcare. Lupin will also be on our radar. The company has entered into a business transfer agreement with a subsidiary to carve out API manufacturing facilities. And lastly, Power Grid. The company has been declared a successful bidder to establish interstate transmission system in the state of Rajasthan.
All right, Surbhi, thanks a lot for bringing us that entire list of stocks. We're going to watch for all of these in today's trading session. Let's also talk about the cues that we should track today. Vivek is here to take us through all of that. Vivek, we were just going through the global setup and looks like the handover is positive and the start will definitely be well in the green.
Well, absolutely right. Yesterday was a very good day as far as equity markets were concerned. We breached historic highs, and even when you're talking about the global handover, like you rightly mentioned, all of the U.S. indices actually managed to close in the green. The Nasdaq, in fact, was the top gainer, gaining over 1%. Oil prices yesterday were largely flat. Now, WTI futures trading closer to the $88 a barrel mark, and Brent futures continues to trade above the $90 a barrel mark. But let's come to the Indian markets, and that's why, the real story lies. Indian markets yesterday, Nifty at an all-time high, went above the 20,000 level. Mid-cap index continues to soar high. That too is at a record level. And in yesterday's trading session, some of the laggards actually managed to come ahead and do a smart recovery. Financials yesterday were amongst the top gainers, and Reliance too helped, the outperformance there also helped the company actually go ahead and the index to move higher. Now today, quite a few key important events lined up. Number one is the August CPI data, along with that the July industrial production data as well. Coming to the primary market today, RR Cable, that particular IPO opens for subscription. EMS IPO, day 3 today, seen a sound subscription as well. As you mentioned, Asian markets and the Gift Nifty indicating a positive start for our own markets.
All right, so let's see how we go after that 70-ish point bump up that we should get at the start of the trading session. Vivek, thanks a lot for getting us all of those cues. With that, it is time for a short break on the show. But when we come back, we're going to talk all about the commodity markets. It continues to be a very hot space. So we're going to bring you all of the action when we come back. Hey guys, welcome back. You're still tuned into Power Breakfast here on CNBC TV 18, and let's talk about the commodity space now. Manisha joins us for an update. Manisha, today crude could once again be very important to track considering the OPEC and IEA reports are also due.
Well, absolutely. And we are closing to near 10-month highs. With Saudi and Russia cutting nearly 1.3 million barrels till December end, and the dollar index trading at a 6-month high ahead of the U.S. inflation. That data comes in today as well. The OPEC monthly report comes in today. The IEA data would come in tomorrow. So, yes, it's going to be a loaded week, and the crude oil price is trading firm ahead of that. It's not just crude. The other commodities also are trading on a higher note. We've seen the copper prices rebound from a 3-week lows. The China inflation reading has been kind of supportive, and the markets now are waiting for the China retail sales factory activity that comes in on Friday as well. But add to that the fact that the China has extended 1.36 trillion yuan in new loans in the month of August, and September is expected to be on the positive side as well. So there is stimulus measures coming in. The economic data seems to be getting better, and that in turn has been supportive.
All right, Manisha, thanks a lot for getting us all of the details from the commodity space. With that, let's move on and bring you an exclusive now. The just concluded G20 summit has been a significant diplomatic milestone for the Indian government. Now, the Indian presidency managed to clinch a consensus on the New Delhi declaration. So, Shireen caught up with India's G20 Sherpa Amitabh Kant to get a sense of what really went on during the final days of the drafting. Kant said that it was gutsy, courageous brinkmanship that saw the tense negotiation leading to the consensus on the New Delhi declaration. Listen in.
Why do you believe that's the case? Why do you think that India was able to do what you believe the UN Security Council could not have achieved?
I think because India was a voice of moderation. India brought Brazil, South Africa and Indonesia together. We brought all the emerging markets together. We brought Saudi, we brought Mexico, we brought Argentina, all of them together. And finally, we brought China together into this. And we put pressure, and everyone agreed. And 20 countries agreeing on the Russia-Ukraine issue. Unbelievable.
On China specifically, and you said that Moscow had a lot of problems even with the final draft that was finally put out. But what about China and the fact that China came on board?
So China, we were constantly in discussion with them bilaterally. We had several rounds of discussion. They had told us that they will agree to this in case Russia agrees. They were fully backing Russia. They would have not agreed to this if Russia had not agreed. And when we had convinced Russia entirely that it was good for them to fall in line, they had issue till about 3:30 in the morning. So we had to spend time with their negotiators till 3:30 in the morning.
3:30 a.m.
So
you were talking to the Chinese negotiators?
No, to the Russian negotiators.
Okay.
We convinced them finally, and then we told the Chinese that the Russians have agreed. So Chinese agreed, but they had a bilateral issue with USA. They said that they will agree to this only if that bilateral issue settled with the United States. It had nothing to do with this resolution. It was some other issue. And then we made the Americans and the Chinese sit down in the morning after the meeting had started. The meeting had started, we had a resolution on this, we had a resolution on everything else, but the bilateral issue between USA and Chinese had not been sorted.
All right, very interesting chat with Amitabh Kant there on what really went behind the drafting of the New Delhi declaration. But with that, it is time for a short break. When we come back, the big story, KKR will invest over 2,000 crore rupees in Reliance Retail. So we're going to bring you all of the details on the other side. Stay tuned. Welcome back. You're still tuned into Power Breakfast, and let's now talk about the important macro cues that we were mentioning earlier as well. India's August CPI, which will be announced today, is expected to come in at 7.08%. This is as per the CNBC TV18 poll, and this is way above the 6% cap by the RBI, but it is below what we saw in June. That figure was at 7.44%. So Lata is here with the details. Lata, take us through what we can expect, and of course, the most important question: how much is food inflation really expected to weigh, and where can we expect that this time around?
Yeah, it's actually 7.08, as you said, the poll, compared to 7.44 in July. So it's really not fallen much, despite tomatoes becoming a little more normalized in their prices. And remember, this 7.08 comes over a 7% last year, same month. So that is not very good, that year over year it is 7%. The poll sees core inflation lower at 4.8. That's very important. RBI often looks at the core inflation because food and fuel are more volatile. 4.8, that compares with 5.9 year ago. So that's a genuine fall. And even compared to last month, July, when it was 4.9. The culprit, as you said, is food inflation, expected to come in double digits, 10%, which may still be a little better than 11.5% in July, but still it's no good. So that would continue to be a worry, because for the Reserve Bank, it has to be below the 6% mark. For the MPC as well. MPC will be on hold till they see it sustainably going towards 4. But for Reserve Bank, if it comes well above 7, then you can expect more tightening. So let's pray it comes a little below 7. That will be psychologically satisfying. And finally, there is also the IIP number which comes out, industrial output number for July. Will be watched. Our poll threw up 5.2%. Again, that's a volatile number. So if it comes below that, it will be a bit of a disappointment on growth.
All right, got that. Lata, thanks a lot for getting us all of those details in terms of what we can expect from the CPI and IIP numbers due this evening. But with that, let's also move on and talk about an important story. Like we mentioned, Reliance Retail gets more investors to join its $100 billion club, with KKR now making its follow-on investment in the retail giant. So Nisha is here to tell us more about this. Nisha, yet another round of investments by KKR.
That's right. The second fund of investments in a matter of 3 years at double the valuation. And it's not just QIA, but more investors really joining the club of $100 billion for Reliance Retail. So KKR, in its follow-on investment in this company after 2020, has now, this time around, in double the valuation, has invested 2,069 crore rupees. And this at a 0.25% stake in Reliance Retail Ventures. And that is done at a rupee valuation of 8.36 lakh crore rupees. So it's a $100 billion valuation that is being given, and again reinforced by more investors coming in. If we really look at the percentage stake of KKR in the company now, after the previous investment of 1.17% stake that it bought at about the fundraise of 47,000 crore rupees that was done in 2020, this time around it has upped its stake to 1.42% stake in Reliance Retail. Now remember, it comes soon after QIA had invested the first tranche of fund at $100 billion valuation. So at the moment, if we really look at the second round of investments coming in for Reliance Retail at double the valuation of $100 billion, about $1.2 billion for 1.25% stake has been brought in by the company in the second round, with 2 investments coming in and KKR being the follow-on investor in the company.
All right, Nisha, thanks a lot for getting us all of the details on this very important story that is on KKR upping their stake in Reliance Retail. But with that, we're going to have to wind down on this edition of Power Breakfast. Thank you all for tuning in. We have Bazaar Morning Call after this short break.